In just 90 seconds, Filecoin's price plunged 30%, erasing roughly $200 million in trader accounts and igniting a wave of frantic sell orders. The chart on screen slashed red, the ticker screamed FIL 30%, and a single question lingered. What sparked the avalanche that could topple the whole decentralized storage ecosystem? A rapid-fire montage erupts, candlesticks tumble, red panic sweeps cascade across the screen, and liquidation explosions flicker like fireworks in a night sky. The voice drops to a whispered urgency. Filecoin just plunged 30%, and this isn't just another dip. It's a crack in the foundation. Text bursts onto the screen, extreme fear, flashing as the FIL ticker bleeds crimson. Cut to an on-camera expert, eyes narrowed, the word cascade highlighted on the lower third. Expert, we're seeing a cascade of minor liquidations, storage deals collapsing like dominoes. The camera shifts to a lone miner's terminal. Lines of code scroll, a red warning blinks. Liquidation imminent. The miner's breath quickens, fingers hover over the keyboard, the screen reflecting a market in free fall. The panic is palpable. Traders scramble, margin calls fire, and the market's pulse spikes. Within a 10-minute window, exchanges report over $200 million of FIL forced out of positions, amplifying volatility to historic levels. A split screen shows a flood of exchange order books, each order slamming into the next, a domino effect that reverberates through the crypto ecosystem. The stakes are no longer abstract. Decentralized storage providers rely on FIL to fund the massive hardware farms that keep the internet's data safe. When miners can't cover operating costs, they must liquidate, pulling the rug out from under the very contracts that sustain the network. A ticker scrolls. Storage deal, revenue plummets, miner cash out, market crash. The question deepens. Is this flash crash a one-off shock, or does it signal a systemic weakness that could ripple through other blockchain-based infrastructures? Our investigation pulls from the front-line reports that documented the crash as it unfolded. Our analysis draws on the ground reporting from major financial outlets. Source: CoinDesk, 2023-11-23. The flash crash unfolded on November 23, 2023, when a wave of margin calls and minor liquidations triggered a classic flash crash pattern, slashing Filecoin's price by roughly 30% in minutes. Source: CoinDesk. Bloomberg's analysts labeled the market sentiment extreme fear, noting that the fear index spiked to its highest level ever recorded in crypto history. Source: Bloomberg. Regulatory filings later revealed that over $200 million of FIL was liquidated through exchanges in a 10-minute span, a volume that magnified price swings and left the order books in disarray. Source: Reuters. The Wall Street Journal highlighted the systemic risk. A sudden drop in storage deal revenue can force miners to sell FIL en masse, threatening the stability of decentralized storage networks. Source: WSJ. Further analysis from the Financial Times pointed to a slowdown in new storage contracts and tightening credit lines for miners, factors that compounded the pressure on the market. Source: FT. The screen splits again. On the left, a graph of storage deal volume declining. On the right, a chart of credit line tightening, both converging toward the same downward trajectory. Every second of the crash amplified fear. Traders watching the ticker saw their positions evaporate, and the market's reaction was not just a price dip, it was a psychological shift. Extreme fear isn't a buzzword. It's a measurable sentiment index that surged to unprecedented levels, reflecting the collective anxiety of thousands of market participants. The camera zooms on a trader's trembling hands, fingers frantically clicking sell, a visual metaphor for the market's panic. The cascade of minor liquidations is the fulcrum. As miners lose revenue from collapsed storage deals, they are forced to liquidate FIL to cover operating costs, which in turn fuels further price drops, a feedback loop that can spiral out of control. When one miner defaults, the pressure spreads like a shockwave through the network, the expert warns, his voice echoing over the chaotic visuals. The implications stretch beyond Filecoin. Decentralized finance. DeFi platforms that rely on FIL as collateral now face heightened risk of under-collateralization. Lending protocols could see a surge in bad debt, and the broader crypto market may feel the tremors as confidence erodes. A world map lights up, pinpointing exchanges in New York, Hong Kong, and London, each pulsing as the price drops, illustrating the global reach of the flash crash. The story is still unfolding. What mechanisms will regulators and the community deploy to shore up the network? Will new margin call safeguards prevent another cascade, or is the market destined to repeat this pattern whenever storage revenue falters? The final shot lingers on the red-tinged ticker, the words extreme fear still flickering, as the narrator leans in, voice low and urgent. Stay with us as we dissect the anatomy of this crash, trace the chain reaction from miner to market, and ask the hard question, can Filecoin recover, or has the foundation cracked beyond repair? The screen fades to black, the beat of a distant alarm echoing, inviting the viewer deeper into the investigation. Cut to a dark server room, rows of Filecoin miners humming under red emergency lights. Narration. When Filecoin plunged 30% in minutes on November 23, 2023, it wasn't just a price drop, it was a systemic rupture. What began as a sell-off accelerated into a flash crash, one so severe that Bloomberg's analysts called it extreme fear, a sentiment index that spiked to its highest level in crypto history. Source: Bloomberg. com/news/articles/2023-11-23/Filecoin drops 30 in flash crash amid extreme fear. The sound of humming servers fades into a low, tense hum like a power grid at the edge of failure. Narration. At the center of the storm, miners. These operators don't just store data, they collateralize the entire network. They borrow against their Filecoin (FIL) holdings to fund hardware, bandwidth, and operations. And when prices fall fast, lenders move faster. Source: WSJ. com/articles/Filecoin's decline shows risks of decentralized storage 2023-11-23. Graphic breakdown. A stylized loan contract appears. A line of text reads, loan-to-value up to 3x FIL collateral. A gauge swings from green to red as the price drops. Narration. Regulatory filings show that over $200 million of FIL was liquidated on exchanges within a 10-minute window. That tsunami of forced sales didn't just reflect panic, it amplified it. Source: Reuters. com/technology/Filecoin suffers flash crash fear grips crypto market 2023-11-23. Cut to an expert interview off-screen, calm but urgent. Expert voiceover. Normally, a 15% drop is bad, a 30% drop. That's uncharted territory for Filecoin liquidity was already thin. The interview fades out. A sudden, sharp synth note cuts in like a circuit breaker tripping. Narration. Behind the panic lay a simple truth: leverage. Some miners had borrowed against their FIL at ratios as high as 3-to-1. When the price collapsed, so did their collateral. Source: CoinDesk. com/market/2023/11/23/Filecoin price slumps 30 in flash crash as investors panic. On screen, a miner's loan contract screen flashes red. Text: collateral liquidated, 12,000 FIL 0.000 FIL. Narration. The liquidation wasn't symbolic, it was real. One example, a miner's 12,000 FIL worth over $1.8 million at pre-crash prices vanished in seconds. No appeal, no second chance, just a default notice and a forced sale. Cut to a line chart. Filecoin price drops from $30 to $21 in under 10 minutes. A red bar labeled margin calls pulses downward. Narration. But the damage didn't stop at minor balance sheets. When FIL price falls, so does trust. Storage deals, Filecoin's economic backbone, suddenly become riskier for clients. If miners can't cover costs, they stop honoring contracts. And when contracts are broken, revenue dries up. Source: FT. com/content/Filecoin tumble storage market concerns. Pop-up text on screen. Storage deals defaulting en masse. Narration. The crash exposed a hidden dependency. Credit. Lenders had tightened lines even before the drop. Analysts now warn that the slowdown in new storage contracts and the sudden drying up of credit created a perfect storm, one that turned a price dip into a network-wide crisis. Source: WSJ. com/articles/Filecoin's decline shows risks of decentralized storage 2023-11-23. A deep, distorted bass note grows, then cuts abruptly. Narration. Among the wreckage, key players caught in the leverage trap. Large mining pools, once seen as pillars of the network, were forced to liquidate positions. Some shut down entirely. Others scrambled to restructure debt under emergency conditions. Cut to a dark terminal screen. A list of active miners flickers as names turn gray and disappear. Narration. The collapse wasn't random, it was structural. When liquidity thins and leverage runs high, even a modest shock can cascade into systemic failure. Filecoin's 30% plunge wasn't just a market event, it was a stress test. And the network failed. Final shot. A single red LED blinks on a server rack. Fade to black. Cut to a live CNBC-style ticker scrolling across the screen. FIL, 30% liquidations, $120 million and climbing. The numbers flash, mirroring the panic that erupted on November 23, 2023 when Filecoin fell roughly 30% in minutes, as a wave of margin calls and minor liquidations triggered a classic flash crash pattern. Source: CoinDesk. The camera pivots to an on-screen expert, leaning forward, eyes narrowed. This isn't just a minor bloodbath. It's a network-wide seizure. The storage market is freezing up, he warns. His voice carries the weight of a sector that, until yesterday, seemed insulated from mainstream volatility. Graphic erupts. A domino chain miner defaults, storage contract breaches, network slowdown, FIL price collapse. Each tile topples with a thud, visualizing the cascade that analysts are already naming. A whispered voiceover threads through the montage. Analysts are whispering one word: cascade, not just a drop, a system collapse. The whisper underscores the shift from isolated loss to systemic failure. The scene shifts to a pixelated, anonymous hedge fund manager. We saw the leverage ratios. When the first miner went under, the margin calls spiraled. Within 10 minutes, over $200 million of FIL was liquidated through exchanges, he says, the distortion hiding identity but not the stark reality. His testimony aligns with Reuters' report that over $200 million of FIL was liquidated, amplifying price volatility. Source: Reuters. Bloomberg's analysts had already flagged the sentiment shift. The sell-off was driven by what Bloomberg's analysts called extreme fear, a sentiment index that spiked to its highest level in the crypto market's history. Source: Bloomberg. That index, once a peripheral gauge, now sits at the epicenter of a crisis that threatens the very architecture of decentralized storage. The narration pulls back to a broader view. The decentralized storage model relies on miners continuously earning storage deal revenue to fund ongoing operations. The Wall Street Journal notes that a sudden drop in storage deal revenue can force miners to sell FIL en masse, exposing a feedback loop that can destabilize the entire network source. WSJ. Here, S where the theory deepens. A growing cadre of critics argue that the crash is not merely a market reaction, but the manifestation of a structural flaw. The reliance on short-term financing to sustain long-term storage commitments. When credit lines tighten, a trend highlighted in the Financial Times coverage of a slowdown in new storage contracts and a tightening of credit lines for miners, the network's elasticity snaps. Source: FT. A split screen compares pre-crash storage contract volumes with post-crash figures, the gap widening like a yawning chasm. The visual reinforces the notion that the market's extreme fear is not a fleeting emotion, but a symptom of a deeper liquidity vacuum. The controversial hypothesis gains traction. Some insiders suggest that a coordinated short sell by large, off-chain actors may have amplified the cascade. No concrete evidence has emerged, but the pattern mirrors past events where a single trigger, often a leveraged position, unleashed a chain reaction across an ecosystem. The narrative pauses to consider the broader implication. If the storage market can collapse so abruptly, what does that say about the resilience of other decentralized protocols that depend on similar incentive structures? The crash highlights systemic risks in decentralized storage and forces a reckoning with the assumption that distributed networks are inherently immune to traditional financial shocks. Source: WSJ. Viewers are left with a stark question. Is the Filecoin tumble an isolated incident, or a warning bell for the entire crypto infrastructure? The answer hinges on whether the community can rewire its financing model before the next wave of extreme fear arrives. The ticker fades, replaced by a stark black screen. The final shot lingers on the word, cascading, pulsing in red, a visual echo of the whispered warning that began this segment. As the camera pulls back, the narrator's voice drops to a low, urgent tone. When a network's foundation trembles, the fallout is never confined to a single sector. The Filecoin crash was the first crack. What lies beyond may reshape the entire landscape. The camera cuts to a dimly lit trading desk where analysts stare at volatile charts. One whispers, "This changes everything." A bold overlay reads implications. Filecoin storage network may face long-term degradation. Source: institutional holders are now underwater, expect forced selling. Source: retail investors holding FIL, you're likely in a liquidation zone. Source: the expert appears on screen, sober, and warns. If you're holding leveraged FIL positions, you have 48 hours to act. After that, the cascade accelerates. Voiceover: this isn't just a crash. It's a systemic shock that ripples through decentralized storage, exposing fragile credit lines and a sudden drop in deal revenue. Source: Bloomberg's extreme fear index spiked to its highest level ever, underscoring panic across the market. Source: within 10 minutes, exchanges liquidated over $200 million of FIL, magnifying volatility. Source: the sudden drop also reverberates through the broader storage market, where new contracts have stalled and miners face tighter credit. Source: analysts warn that a prolonged downturn could force miners to sell more FIL, creating a feedback loop that depresses storage prices further. Source: for anyone holding FIL, the prudent steps are clear. Audit your exposure, use stop-loss orders, and stay alert to exchange liquidation notices. Ignoring these signals could leave you exposed to the next wave of forced sells. The takeaway is clear. Stay informed, diversify, and protect your assets before the next wave hits. Act now, or risk being swept away by the same forces that drove the 30% plunge in minutes on November 23, 2023. Source: